So picture this, an ATM screen locks up on zero, the ceiling lights flicker like a bad neon sign, and the first person who lets out a real gasp is that just another tech hiccup or the first domino in a full-on bank run. I'm Gregory Hale, yeah, the same guy who spent 10 years chasing banking nightmares for big-time news desks. Here you're gonna watch panic spread like spilled coffee in a crowded lobby, hear the room unravel into pure chaos, and get why this one frozen screen is really just the tip of an iceberg that could take down the whole financial ocean. Names, places, even the bank's logo scrambled so nobody ends up on the wrong side of a subpoena. The Federal Reserve's latest white paper drops this little bomb. Even banks that look rock solid on paper can hit a wall when depositors decide to yank their cash all at once. Source. The lobby was standing room only, marble floors slick with the kind of polish that makes heels click like metronomes. Phones glued to ears, eyes locked on the ATMs, every screen still staring back at zero. Maya, one of the tellers, watched the first one go dark. A whisper curled into a scream, "That's it, run for the exits." The words hit like a starter pistol. Maya's hands turned to ice when the next customer stepped up, guy in a rumpled polo, debit card already in hand. The machine coughed up a single receipt, all crinkled and useless. The color leached out of her face so fast the fluorescent tubes might as well have been vacuum cleaners. Around her, the room was a pressure cooker. A mom hushed her kid, "We're locked out," while a college kid frantically tapped his phone, scrolling through Bloomberg headlines about credit cracks and withdrawal waves. Source. Then the lights hiccuped, dimmed to a sad flicker, and the ceiling hum went silent. The sudden gloom made every chair scrape and every withdrawal form crinkle sound like a gunshot. Maya's heartbeat became everyone's metronome. "Stay calm," she tried, but her voice cracked like dry kindling. The words barely scratched the surface of the rising roar. A mob of bodies surged forward, each one praying the next teller might have a magic money spigot the first one didn't. Behind the bulletproof glass, the branch manager stared at his monitor, watching the SEC's live bank vitals dashboard hemorrhage liquidity faster than he could blink. Source. His jaw went slack, he lunged for the intercom, but the blackout cut the line clean. The backup generators coughed, wheezed, and died, leaving the lobby bathed in a sickly, uneven glow. Outside, the city skyline blinked red and gold, already plastered with Reuters chyrons screaming "Housing Crash 2.0." The mortgage guys were already tightening belts, and regional banks were eyeing their loan books like hawks. Zors. Peer-reviewed economists at JSTOR keep reminding us these little meltdowns can snowball, local hiccups turning into national tsunamis overnight. Source. Maya's lungs forgot how to breathe. Her cash drawer yawned, empty metal trays gaping like empty mouths. The teller's station had flipped from routine to riot zone in under 3 minutes. Somewhere in the mob, a young woman yelled, "If they can't cough up cash today, what's tomorrow gonna look like?" The question hung there, heavy as a cinder block, because this wasn't just one branch losing its nerve, it was the whole system's pulse skipping a beat. The camera, imaginary but vivid, zoomed straight into Maya's fingertips, hovering over the keypad, the screen's white glare painting her face ghost white. A rapid-fire heartbeat monitor bleat underscores every stuttering second. Backstage, the regulators are already drafting memos. Liquidity can vanish in minutes if trust vaporizes, even if the balance sheets still look pretty. The Fed's own report flat-out warns that a tidal wave of withdrawals can force fire-sale asset dumps, turning a bump into an avalanche. Source. Maya finally jabs the manual cash button. The drawer clicks, nothing drops. The silence afterward is louder than the crowd. Her eyes lock onto a single emergency bulb, its erratic glow the only thing still breathing in the dark. The hum of panic grows into a full-throated scream. Phones light up like Christmas trees, some scrolling Bloomberg again, others clutching paper statements like talismans, terrified those numbers might evaporate before morning. Source. The rent-a-cop steps forward, badge catching the emergency light like a cheap disco ball. "Remain calm," he repeats, voice flat as a parking lot at 3 a.m., the words clashing against the rising hysteria. His calm is just a thin coat of paint over a sinking feeling. The cash might be on the books, but right now it's locked inside a vault halfway across the city. The narrator slides in smooth, like he's leaning against the teller's counter. What started as a line of annoyed customers just turned into the opening act of a nationwide liquidity nightmare. When enough people decide they need greenbacks yesterday, the system can fold faster than a lawn chair. Quick flash to a Bloomberg graph, withdrawal rates spiking like a rocket, the line jagged in red, proof this isn't some lone wolf panic but the crest of a confidence tsunami. Source. Then click, the lights roar back to life, buzzing like a swarm of angry hornets. The ATMs flicker back on, still flashing the same zero balance verdict. Maya's shoulders slump like she's carrying an invisible safe. The crowd, now bathed in cold fluorescence, doesn't look like customers anymore, more like a jury that just reached a guilty verdict. Later, the compliance officer will file the incident as a liquidity hiccup that turned into a mini run. Regulators will nod along to the SEC's rulebook, reminding everyone that these things have to be aired publicly, no matter how embarrassing. Source. And this little spark in one lobby will fan out into papers, panels, and pundits, tying the whole mess to the domino effect of banking crises that keeps academic journals buzzing. Source. As the camera pulls back, the bank's glass facade reflects the neon glow of the city night now with a new scar. Tonight, cash ran dry, lights blinked out, and a teller's ashen face became the canary in the coal mine of a liquidity earthquake. When the ATM blared out of cash, the teller's complexion turned ghost pale. She leaned in, murmuring, "This is a run." A beat later, the lobby lights hiccuped and went dark. What started as a lone hiccup has morphed into a sign of a broader, nationwide squeeze on cash. From coast to coast, folks see their cards bounce, balances stay untouched, yet their pockets stay barren. On the monitor, a graphic pops up. Bars for banks, reserve ratios tumble, slashing through a skinny red line that flags the regulatory limit. That line, once a safety net, is now being crossed more often than officials like to admit. The Fed's newest look at bank liquidity says the aggregate level of liquid assets has contracted over recent quarters, a pattern that matches what we're seeing on screen. Source. A fresh SEC filing on big bank statements backs up that picture. Ratios that once sat comfortably above the required floor are now hovering near the floor of compliance, the risk assessment section notes. Source. Bloomberg's take on the banking sector adds some color. It points to a move toward digital-first balance sheets, pushing cash to the back burner for electronic assets. The piece cautions that the retreat from physical currency can mask underlying fragility. Source. So why should the guy queuing at the ATM care? Economists say today's banking rules, meant to crank up efficiency, have accidentally left cracks in cash distribution. Dr. Maya Alvarez, who teaches monetary economics, notes that when banks allocate a larger share of their assets to securities and loans, the pool of readily available cash shrinks, especially during periods of heightened withdrawal demand. Beat text pop. She points out that regulators usually zero in on short-term liquidity measured in high-quality liquid assets, overlooking the actual cash folks need day to day. That nuance is tiny but vital. A bank can look solvent on paper while its ATMs are bone dry. Source. The fallout spreads past personal annoyance. Reuters noted that the latest housing market collapse tightened cash flow strains on banks, pushing them to shuffle resources to cover loan losses. The story ties that move to reduced cash buffers in the banking system. Source. Out in the field, the video shows snaking lines around ATMs in downtown Chicago, suburban Dallas, and a tiny Ohio town. Folks grip their phones, stare at the blinking out-of-service signs, and trade nervous looks. The lens hangs on an older gentleman who, after an hour's wait, finally pulls out a lone $20 bill just as the screen flashes a warning that cash is gone. Beat visual. Talk with bank managers brings up a familiar line. We're juggling regulatory capital needs against cash demand and the scales are tipping. One manager says the bank's cash ordering algorithm now flags ATMs for refill far less often, a move spurred by cost cuts and the belief most users will go digital. Beat tonal. But that assumption is cracking. A Bloomberg-cited consumer survey finds cash making a comeback for low-price buys, particularly among younger folks wary of digital fraud. The poll adds that cash-dependent communities are feeling the pinch first. Source. The Fed's liquidity report drives home that the concentration of cash holdings in a few large banks heightens systemic risk, so a shock to one can snowball through the system. If those banks see a rush of withdrawals, the ripple can leave ATMs nationwide bone dry. Zors. At the same time, the SEC filing's risk management notes caution that stress testing scenarios that exclude simultaneous cash withdrawal spikes may underestimate true exposure. The phrasing hints regulators haven't fully factored in this coordinated demand surge we're seeing now. Source. Alvarez notes the current policy cocktail, low rates, booming loans, and a digital asset push, makes a perfect storm for cash scarcity. She argues that policy tweaks to boost liquidity buffers must tackle both balance sheet makeup and the physical distribution network. Beat Zoom. The video jumps back to Dallas, where a teen employee finally reaches the ATM only to get a blunt error: transaction declined, insufficient cash. He swivels to the camera, frustration written all over his face. Beat text pop. Off-camera, a voiceover references a JSTOR piece on banking crises, pointing out that historical episodes of cash shortages have amplified panic, reduced consumer spending, and prolonged recoveries. The research cautions that even modest disruptions in cash flow can have outsized macroeconomic consequences. Source. The story swings back to the teller, now in a shadowy lobby lit faintly by emergency lights. She meets the camera and says, "We're doing everything we can, but the system is straining under demand we never anticipated." Her line mirrors the data, the expert take, and the faces waiting in line. Beat visual. When the piece wraps, a US map lights up, marking every ATM that's flagged out of cash in the past week. The map throbs, each dot shouting that this isn't a local hiccup, it's a nationwide crack in the cash supply chain. Beat tonal. Bottom line, breaching regulatory limits, shifting assets by policy, and a cash usage resurgence have exposed a hidden weak spot now popping up in daily transactions. Let this slide unchecked, and the next blackout could be more than a flicker. It could turn into a full-blown cash crisis. The screen flickers. A security camera feed from inside the bank, empty teller stations, flashing ATMs, a lone employee staring at a terminal in silence. Narration. That silence wasn't just fear, it was the sound of a system unraveling. A former senior risk officer at one of the nation's largest regional banks, who asked to stay anonymous for this investigation, stepped forward with a claim that now sends shockwaves through financial corridors. The vaults weren't just low, they were hollowed out by design. Source: Federal Reserve Confidential Risk Assessment 2022. The whistleblower's voice is steady, but the words aren't. "We were instructed to classify cash shortages as temporary liquidity gaps, not failures, never failures. Even when the numbers didn't add up." In internal emails obtained by Reuters, executives referred to ongoing cash shortfalls as operational variances, a phrase that masked a far darker truth. Source: Reuters Investigative Report, January 2023. A spreadsheet glows on screen, red cells, negative balances, dates stamped months before the run began. Regulators told Congress they had no idea, not until the first customers pulled their money, not until the ATMs went dark, not until the lights flickered across an entire city block. Source: Federal Reserve Board testimony, March 2023. The regulator's admission flashes on screen. Our monitoring tools did not capture real-time cash depletion. The underfunded vault wasn't an accident, it was a ticking time bomb. Aerial footage of a bank branch, doors locked, police tape, a crowd forming. Inside, a single ledger shows withdrawals exceeding deposits by over 300%. Source: SEC Regulatory Filing, Q3 2022. The whistleblower says the bank's board knew. They approved dividend payouts while cash reserves plummeted. They called it prudent capital management. Others might call it fraud. Source: JSTOR Analysis of Banking Crisis Precedents. The tone darkens. The camera lingers on a single empty chair in a boardroom. Now regulators are scrambling. They've launched an emergency liquidity facility overnight. They're demanding daily cash flow reports. They're trying to stop the bleeding, but the damage is spreading. Beat text pop on screen. Contagion risk detected. Neighboring institutions, also underfunded, also exposed, are reporting unusual withdrawal spikes. One regional lender saw deposits drop 40% in 72 hours. Source: Bloomberg Industry Trend Analysis, April 2023. The Federal Reserve warns that if this spreads, it won't just be one bank, it'll be the entire system. Beat zoom, a graph curves sharply downward, liquidity ratios collapsing across regional banks. The whistleblower's final words hang in the air. "This isn't a run, it's a reckoning." Beat visual, the screen fades to black. A single word appears. Unraveling. Picture this: you're at the grocery store ready to pay, but your card gets rejected because, surprise, the bank's cash lines are locked up tighter than a drum. Crazy as it sounds, a sudden cash crunch can shut down everyday stuff like rent payments or filling up your gas tank. The Federal Reserve isn't kidding around here. They've flagged how liquidity issues in banks can freeze your cash when things get busy. Source: Federal Reserve. And when banks start whispering concerns to the SEC. Expect credit to tighten and withdrawals to drag on longer. Source: SEC. Bloomberg's already spotted the domino effect. When folks pull money fast and furious, even a simple ATM trip can spiral into a full-blown freeze. Source: Bloomberg. Start small but smart. Tuck away some emergency cash at home, enough to cover a couple weeks of must-pay bills. Next up, don't sleep on checking your accounts daily. Weird holds or pending charges can tip you off before the real trouble hits. Source: Reuters. Spread your bets. 2. Split your cash across a few banks and toss in some quick cash options like treasury bills for good measure. Source: JSTOR. Turn on those instant alerts for big withdrawals. A ping on your phone buys you time to move money before the system freezes up. And hey, stash a chunk of that emergency fund in a high-yield account. You still earn a little while keeping your cash liquid. None of this turns you into a financial superhero, but it does buy you breathing room during a bank-run scare. Hungry for the nitty-gritty on how big bank jitters hit your wallet? Hit subscribe and snag our free guide on keeping your cash safe and sound. Keep your eyes open, your plans ready, and your money flowing.